this chapter, we're going to share with you one of our favorite ways to trade cryptocurrencies on a medium-term basis. And what we do is we actually adapt a strategy that we've been using for a very long time in trading currencies, and cryptocurrencies are a currency, to the cryptocurrency market. So it works well in Forex, spot, as well as cryptocurrencies. Before I get too much into it, I'd like to share with you this disclaimer that says trading Forex carries a high level of risk and may not be suitable for all investors. So for those of you that are watching this video on demand, I highly encourage you to pause the screen, read through the disclaimer thoroughly before moving forward. So this cryptocurrency strategy uses my personal favorite indicator, the double Bollinger Bands, which I've been using for more than 10 years. It basically uses the double Bollinger Bands to catch a new cryptocurrency trend because, as you may know, cryptocurrencies are very trending. Now, the traditional way to use a Bollinger Bands is most people just use the 20-period 2 standard deviation Bollinger Band. And what I like to do is I like to add in the 20-period 1 standard deviation Bollinger Band. So what this involves is, and let me just show you how to lay these onto your chart. So this is just standard chart. I'm going to add on Bollinger Bands. We're adding 2 sets, so I've clicked on it twice. And the first set is standard 20-period 2 standard deviation Bollinger Band. I'm actually going to get rid of the we'll leave in the basis. I'm going to make these colors all black, and we're going to get rid of the background. Not too sure where the green is coming from, but hopefully they'll disappear. Okay. And then I'll add in the other set, which is we'll get rid of the background, black, black. In this case, we're going to get rid of the basis, and we're going to do 20-period 1 standard deviation. So the basis is the red line, which you would use as part of analysis. So this is how you lay on the double Bollinger Band. So the next question you may ask is, how do I use this? Well, trend catcher trading rules. The first thing you want to look for is you want to look for the Bitcoin or Ethereum to close above the first standard deviation Bollinger Band. When it does, you want to check to see if the last 2 candles are below the first standard deviation Bollinger Band, because this kind of tells us whether this is a new trend or not. If that's the case, you buy at pretty much right before the close or at the market open. So probably buy. I think it would be better to say buy at, well, I guess 5 p.m. is fine, because if you're trading on CFDs, they trade 24 hours, and you want to set your target on half of the position at 1 times risk, and then you want to trail your stop, because when it goes, it can go for a pretty big amount, and you only exit on the close below the first standard deviation Bollinger Band with the initial stop at the 20-day SMA. So when the first half of the position is closed, you move your stop on break even to break even, and that's when you trail using the Bollinger Bands. It sounds complicated, but when we look at the charts, it'll be much easier explained. Let me start by explaining it from, kind of a really long uptrend. Okay, I was actually on the wrong time frame 1 hour chart. You want to use this on a daily chart. That's when it's most effective. So we can see it, the first example right over here. Here we can see that Bitcoin's closed above the first standard deviation Bollinger Band. The outside lines here are the second standard deviation Bollinger Bands. The inside lines are the first standard deviation Bollinger Bands, and the green line is the basis. So first you see that Bitcoin's closed above the first standard deviation, and at the time you go long. So you go long at the close 4,200. Your stop is at the 20 SMA, the basis line of it's 38.95, so let's just round it out to 3,900 for easy math. So basically, you're risking 300. So you want to target at least 150. So that's 4,200 plus 150. That's 4,350. And you can see a couple days later, I think only 2 or 3 days later, well, maybe 4 days later, 4,350 is reached. That's when you exit half the position. And then you move your stop to break even, your original entry price, 4,200. So if it continues to move in your favor, it becomes a really beautiful uptrend, great. You'll be able to participate in it. If it flounders out, then you get to close your position at the original entry price, and you've already made money in the first half of the position. So in this case, you can see that we closed first half for 150, move our stop for break even, and Bitcoin actually closes below the first standard deviation Bollinger Band, so that means that we're out of the trade. Here's another trade to the short side. Here we sell, and we sell here at 42.26. The 20 SMA is at 44.32. So let's just say it's all the 32. So it's about a 200-point risk. So we're looking to target 4,026. So 4,026, basically 3 days later, Bitcoin collapses, 4,026 triggered. We stay in the trade, we close half of the position, and then we move our stop to break in. You can continue to trail if you want. I mean, if it went all the way down to 3,200, hopefully you've taken some more money off the table. If you really abided by the first standard deviation rule, you could have waited to close the rest of it at 4,100, which would have given you a little bit more profit, but it's such an extended move, you should have been trailing by something at that stage. I don't know what's going on here. Let me just refresh the chart. So let's take a look at, so I guess the chart completely reset, which actually is a good thing because I'll show you how to set up the Bollinger Bands again. So we're adding 2 sets of Bollinger Bands. That's one set. We're going to add in another one. So adding in the second set of Bollinger Bands. All right, so 20 period, 2 standard deviation. I just made it the basis of bright color. I like to make everything consistent, no background. And then this one, 20 period, changed to 1 standard deviation. No basis in this case. Black, black, background. Okay. So we were looking at examples. Here's another example. In this case, we've got a bit more of the uptrends. We would have gone long here at 4,300. You can see the last 2 candles are below the first standard deviation Bollinger Band. Stop is 38.72. So in this case, we have a pretty big stop. So it's about, let's just do 3,900, about 400 points. So the 4,300, 400 points, so you're looking for 4,500. And a couple of days later, we get hit. And in this case, you actually close second half position somewhere up here, so you made more money. And this is another example of the same situation where you went long, maybe here or here. You probably would close first half the position here, second half over here, so you would have gotten a nice part of the uptrend. The short rules are the exact opposite. You look for a close below the first standard deviation Bollinger Band. And this should actually say in a downtrend. And you want to check to see if the past 2 candles are above the first standard deviation Bollinger Band. If that's the case, sell at either the close of the candle or the open of the next candle on the daily chart. Set your target on half of the position at 1 times risk, trail or half the risk, depending upon how much you want to do. Either way, it works really well. Exit and close below first standard deviation Bollinger Band with initial stop of 20 SMA. And then when the first half is closed, you want to move your stop to break even. So let's look at some short trades. Sorry, that's a wrong chart. Let's look at some short trades here. Here's a short trade. So we went short here at 23.23, and the Bollinger Band's at 2,500. So let's just say about 200-point stop. So you can either go 100-point target, or you can just go 200-point target, which is 2,100. And either way, you would have closed over here and then gotten a little bit more when it closed back above the Bollinger Band here. So we're seeing multiple examples of it working. Of course, there's times when it doesn't work, like this one doesn't work. But it makes up for it when you get a really nice uptrend. It's one of those high profit, generally high accuracy strategies. Let's see if we have another example. We're going much further back here, but here's an example as well. This is also an example to the downside. And even in the recent trading, we saw plenty of examples of this in action. Now, common other questions I get asked: if I miss a trade, can I still get in? Yes, if the first target has not been reached, but you want to make sure you stick by the first target. What happens if such a big movement that it goes from the top Bollinger Band all the way to the bottom Bollinger Band, or from the bottom Bollinger Band all the way to the upper Bollinger Band? Is it still a valid trade? Yes, because it actually reflects the excessive strength or weakness of the instrument and the currency pair. Should I take the trade if it closes all the way to second standard deviation Bollinger Band? Yes, but be careful, because it can be risky at that stage, because you could definitely be looking at an overextended move. And can I use the Bollinger Band as my initial stop? Meaning that basically, instead of using, if it basically pierces above the Bollinger Band, instead of using this 20 moving average as a stop, can you use that? Yes, but you need to give yourself some buffer. You need to give yourself at least 50 points of buffer. And so, those are the common entry and exit questions that we get in relation to this. Another question I get is, can I use this on a shorter term chart? You can't use this on a 1 hour chart. It's just not effective. A 4 hour chart you could try. Like here is the first signal that we get in this prolonged period, because this closes above the first standard deviation Bollinger Band. This one and this one's below it, and you can see it's a very nice uptrend. This one also works really well. This one did not work. This one did work. This one did work. You have to be more nimble with your profits as well. This one worked really nicely as well. So you can see it also works pretty well in a 4 hour chart. So you can adjust that as those parameters if you like. Like this one worked really nicely. So it works well on the daily chart as well as the 4 hour chart. And in one of the later chapters, we show you how to install and set the MT4 EA, so you can basically automate this process. And hopefully you enjoy the strategy, because I think it's a very effective way to trade these currencies. We can even see how it works on Ethereum, since we have a little time, and we'll just look at it on a daily chart quickly. So here, Ethereum, let's go all the way to the right hand side of the chart. Ethereum, obviously more spiky than Bitcoin here. It doesn't work so well. So it actually doesn't work as well on Ethereum, but it's a nice Bitcoin trading strategy. I think with Ethereum, it's just too spiky that it hits it hits the basis line, the 20 moving average, quite often. So it definitely works much better on Bitcoin, and I would use it more of a Bitcoin's trading strategy, which there's enough opportunity, and kind of not use it in Ethereum, because you can see Ethereum doesn't work as well. All right, thank you so much for listening. I hope you enjoy this strategy as much as I do.